So I know on every single page that you've been to, it says refinance now, 3% interest rates, 2.5% free money.
Free money?
It kind of is.
Yeah, but be careful what you see out there, because there's always people who are going to sell you something or sell you what you want to hear. Let's put it that way. But be careful. Working with a true professional and getting true advice on the largest debt you probably have and the largest asset you probably have, it makes a difference of the advice you get and the tools they use to get you there.
Okay, so speaking of tools, we utilize Mortgage Coach. And today I sat with Scott Crayon, one of our mortgage advisors, and we were looking at a Mortgage Coach analysis. And believe it or not, this is why we talk about all the time how APR is not a good way to shop.
Right.
Even though in the 70s, the banks wanted you to shop with APR. You were taught to shop with APR. We look today at the exact same payment, the exact same cost of the loan over 30 years, yet the APR was 4.0 versus 4.2. How could that be possible?
Well, there's a lot of ways to, one, manipulate APR.
You got it.
Which is annual percentage rate, by the way.
Right. So the reason is the way that APR is calculated on a purchase is it takes into consideration those purchase closing costs. So if you got a credit from the seller to pay for those purchase closing costs, we had two options to look at. One of them where we had a purchase closing cost credit from the seller, and one of them where we didn't have a closing cost credit from the seller. But the net cost over time of the loan was exactly the same. So APR is not a good way to shop, and not every time would you know that.
That's why we use what's called a total cost analysis. It takes everything into effect. It actually makes our job easier. Thank you, Dave Savage and team. We love this program. We've been using it for well over a decade now, and it only gets better and better. So what's nice is whatever program or option you're looking at, and make sure they give you options, because a lot of times, for example, if you're doing a refinance and you say, I just want the lowest rate, or the lowest rate without points, may not be your best option, because your idea is to lower the rate, and especially if you want to pay off the home quicker and you're not paying points, you may lose 0.5% a rate.
All right, so let's talk about this for a second, because there's a lot of different business models, and one of the business models that makes things sound very sexy is your servicer, the person who currently holds your mortgage. They have ulterior motives to get you to refinance with them. They have bond performance that they need to try to accommodate for, and if you don't stay in that bond pool, they have a problem. So one of the things they're going to do is they're going to try to sell you on a new 30-year mortgage almost every single time. It's very rare that you talk to your servicer and they talk to you about things like a 20 or a 15-year mortgage, which right now, by the way, you should be looking at.
Yeah, because that could substantially reduce, of course, the years, no duh, but with rates being so low, you might be able to get a lower term. We're doing that on one of our properties.
Let's go ahead and disclose, right? We are raising our payment by $120 a month right now, right?
We're knocking off 8 years.
Yep, and it's not so much about interest rate as much as interest rate differential. We're taking a property that's at 5.25, and we're moving it down to 3.625, but we're going to a 20-year mortgage. We've got 8 years left on that mortgage. So even though we're paying a little bit more every month, we're going to save 8 years worth of payment.
Tens of thousands of dollars in interest. So it's a smart move. So make sure you look at all options, because maybe you didn't know that going to a 20 or 15-year might not be as costly as you think. Make sure you look at whether points are a better option. Believe it or not, yes. Is there points? But even if you build in the loan, which just say it's $4,000 in points, whatever the number is, you pay that in points. Go, oh, I can't believe I paid that. But it lowers your interest rate enough to where you can pay extra towards the loan and pay it off even faster.
And we've been doing this for a long time, and right now points are as valuable as I remember them ever being.
Ever being, yes.
Yeah.
I think
they're
ever.
very valuable right now. You can, depending on the lender, you can make a significant impact in your interest rate with those points right now. And also remember, like when you see these, by the way, when you see the Freddie Mac national average, so the media jumps on the bandwagon that rates are low, you're already about 10 days behind of when that happened. So you cannot be watching that to know when interest rates are good. You must be talking to a mortgage professional. Yeah,
because luckily we talked to Barry Habib and MBS Highway, and we watch bond charts, actual mortgage-backed securities, daily as they move up and down during the day, and we know what all the economic indicators are of when is a good day to lock or not. And we know the bottom of the trends, meaning resistance and support levels, and that can make a difference of 1/8, 1/4% rate?
Yeah. So this week we saw the opportunity to lock at the best day since Halloween. Well, that's a good day to advise our clients to take a lock. And you say, well, are they going to get any better? I don't know, but it's the best in the last 40 some odd days. So why not take action, especially if that was the best in the last couple of years or in the last year or so. So we've seen a lot of great opportunities to lock in some good rates. Don't be greedy. Take advantage. If you could get something with a shorter term, with a 3 in front of it, that might be something good to consider. I know you're seeing some stuff with 2s in front of it. If you're looking at 15-year mortgages, you could possibly get something with a 2 in front of it. And if you can get money with the 2 in front of it, with inflation where
free
it is,
money.
it is free money.
I knew I stole it from you. I knew I did.
Of course
it's
it
his
is.
favorite thing.
But it's true.
All right, thank you for being part of the National Real Estate Cafe. We hope you're sharing this with your friends, your clients if you're real estate agents. Hopefully you guys are watching this daily because you're not in the know, I'm sorry. And we let you stay in the know, no fake news. We watch the trends for you and keep you in the know. So the only way to do it is go to donandgino.com.
Subscribe to our YouTube channel.